By 2026, according to Cathie or Organvest, Tesla shares might touch 5,800 pre-split. As of right now, one stock split has a post-split value of roughly $1933 per share. In the worst-case scenario, shares were valued at $2,900 before the split, but after the split, they would be roughly $967 per share, with a projected value of $4,600 per share by 2026. The figures are enormous. If you're interested in learning more, keep watching as I break down ARK's Tesla projection until 2026. The chart is complicated, so please show your support by liking this video. If you subscribe to our channel, let's start by examining the bear case. According to this example, 10 million cars will be sold at an average price of $38,000. This means that $372 billion will be made from auto sales alone. That is $380 billion. We know that the 10 million is a rough estimate. But what's even more astounding is that the row next to a human-driven ride-hail generated $67 billion in net revenue. Robo-taxis, on the other hand, are autonomous ride-hails valued at $51 billion. This is absurd, to say the least, but what's even more outrageous is that the gross margin on electric cars is 46% compared to the Q3 results of 2018. By 2026, the gross margin will be an absurd 50-50. Amazingly, the total is 37-37 with a small margin. That's efficient. In the third quarter, it was a little over 23, but by 2026, they expect it to reach 37. It's excellent that the practically ridiculous enterprise value to EBITDA is 14.5. However, I'm intrigued as to how they determine the enterprise value in 2026, as we typically calculate enterprise value in the present and allow for the full 2026 period. I agree that they already know how much debt and cash they will have, but it's a leap to think that they'll deliver 9.8 million vehicles by 2026. Others estimate a gross margin of 50 in 2026, which would give us an income of about $250 billion and justify the stock price of $967, which is $2,900 pre-split based on total gross profit after costs. Let's see how things work out in the future. Using enterprise value by EBITDA instead of operating margin or expenses, Cathie Woodard's graphic will reveal how they arrived at the Tesla stock price and market worth of $3.3 trillion by 2026. However, enterprise value requires knowledge of cash and debt by that time. Hence, it's reasonable to assume that by 2026, assuming they're turning a profit of 50 and running a margin of 30 seems reasonable to me, but I believe that by 2026 we'll need more than 10 million vehicles or even robo-taxi or ride-hail revenues. And I'll explain why. If they deliver 9.8 million vehicles by then, they'll grow at a phenomenal 54%. And by 2023, 2024, or 2025, they'll increase by 60 to 65%. This will force them to release the new generation sooner, necessitating the development of new strategies. Additionally, the new vehicles must be half the price of the Model 3 and Model I, as shown in the Q3 earnings rep board. They'll move quickly because I need 9.8 million vehicles for ARK. Although I think it's extreme, you won't be able to grow 64% annually. If you don't move quickly to create the vehicles in 2024 or 2025, Tesla wants to grow by 50% annually, not 64. However, they claim 60, while it may be feasible after new plans are established and 20,000, 25,000 cars are released in the next 2 years. This is not realistic, as by 2024, robot taxis will be mass-produced. Although I doubt they'll hit 51 billion by 2026. It's possible if everyone collaborates to support human-driven ride revenue, since they anticipate 67 billion by that year. Journey haul revenue won't be relevant until a robot tax is put into place. Given that you can drive a car without a human being behind the wheel, why would you want one? If there were 10 million vehicles instead of just 6 million, you could have both human-driven and robot taxis. Paul is losing his mind. Unexpectedly, Tesla's insurance and energy weren't included in the artwork, despite the company's absurd $3.3 trillion valuation. This would have given the argument more substance and realism. ARK and Cathie would expect 70 million vehicles by 2026, while the 2030 target of 20 million vehicles will be delayed by a few years. Although it's crazy, the Robocab sales are even more outrageous, nearly $500 billion. It's crazy that it will take 2 years to produce $500 billion worth of robot taxis in mass production by 2024. But there's a different video where she claims the average selling price will be $30,000. We're approaching $500 billion in simple income, not net income operating margin, with total revenue expected to be close to $1 trillion and net income of roughly $600 billion. 17 million vehicles won't be sold by 2026, in my opinion. That won't take place once more. Although I love Tesla, I don't think this will. A $500 billion event is considerably less likely to occur. Robotaxi by 2026 is not likely to happen until 2030 or 2032, but 2026 is a very positive year. Let's look at the bigger picture. In 2022, we will end up with about 137 million vehicles, but in order to reach the 17 million vehicles delivered by 2026, they will need to grow at a rate of 88% per year, which is extremely intense. I don't think they will grow at a rate of 88% again in 2022. Instead, they may grow 60 to 65% in 2022 Q2. Moreover, I don't see the edible case of robo-taxis happening anytime soon. Looked at Uber, with roughly 3.5 million cars on the road and Uber generating about $17 billion annually, we may anticipate that by 2024, Tesla will have doubled the number of cars on the road and offer more affordable services comparable to Lyft. The average selling price of each vehicle indicates that Uber chooses to compete with Lyft and Tesla rather than follow Tesla's lead. Falls more precipitously than in the bear scenario because Cathie projects that by 2026, each vehicle will cost $30,000. Total profit margin revenues of General Motors, including outstanding EPS and P shares, show that by 2025, the bookcase will be worth $3.3 trillion. What's even more crazy is that from 2025 to 2026, the value literally doubles. I don't think this will happen. And my projection for 2026 at a 4-type is $1,000 to $100 per share. But she's suggesting $967 with a 22.5p if they sell 10 million vehicles. 7 million, I say, but we'll see how things pan out. According to her, the price per share by 2026 is expected to be either $1,500 or $4,600. By 2026, people will realize that the Cathie Woods argument is ludicrous and that the bear case is more likely to succeed financially. Modified the process to get excellence examining the outside in greater detail reveals lovely, flowing lines running through the casting. These lines serve a purpose beyond aesthetics. Without them, the casting wouldn't be able to support the weight and tension placed on it. Thanks to the raised ridges, Tesla's design is astonishingly smooth and allows the liquid metal to pass through with no obstructions. Traditionally, the process would include building the design using an intricate web of meshes and triangles akin to making an animated 3D character. But all those triangles and meshes served as obstacles to the metal's movement. This novel technique guarantees quick homogeneous flow, avoiding blobs or other abnormalities in the casting. When the metal cools, its FS series trucks have been the best-selling cars in the US for decades. So the potential disruption in this market is significant, and profits for the stock if you include additional items like energy insurance and many other things that the test was intended to implement. Yet, in terms of stock price, the bear scenario more plausible overall. We'll have to wait and see what is more likely. This video outlines Cathie Wood's projection for Tesla's stock price by 2030. Please let us know if you agree or disagree with her, and don't forget to like and subscribe while you're at it. Thank you for watching, and we hope to see you in our next films.